Steve and Meade again, another Bullseye Guy shortcast. I have a phrase, it's called retrospective evolution. Well, what does that mean? How do we look into the past retrospectively, what's worked, and use the evolution of new technologies to do things better, faster, possibly more efficient? Let me talk to you for a minute about financial services. Primarily stocks. Let's look at the history of how you take a company. You get a company idea, you might raise angel money, then you might raise venture capital. The angels are the early guys in. They're usually in there for the long term. 90% of the companies fail. You hope you get some liquidity. The VCs come in on top of that. Then maybe the institutional money. Then maybe 3, 4, 5, 10 years later, if you're lucky, there's an IPO, the big win. Taking a company public. Long term. Big companies are on the NASDAQ, New York Stock Exchange. If you go down a level, in the United States, we have what's called the OTC, the bulletin board, often referred to as the penny stocks. Well, what makes penny stocks interesting? They're volatile, they're high risk, but they're also potentially high return, high reward. You could get in a penny stock, a pink sheet, 5 cents, 10 cents. That might go to $1, $2. So the appreciation is much greater, but the risk is also much, much higher. Let's talk about equity. The reason this is important, a lot of people go, oh, well, I'm investing because I get equity in a company. Equity is a bit of a fallacy early on in the early companies, especially in a penny stock. And I don't mean that bad or pejoratively. What I mean is the majority of penny stock companies, if they don't make it, you as the investor, even though you own equity, you really don't get anything back. Especially the early stage investors, the angel guys, there's not a lot of protection. Now, granted, as a company gets bigger, equity comes with some cool structures, some cool legalities, some things that do offer protection. Then there was this world of what's called crowdfunding. Now, crowdfunding got kind of logo. These were projects that came out where you give somebody $100 and a t-shirt and you get a cool product, but you didn't own equity. But now you could crowdfund, you could get a community together to actually do an investing. In the world of stocks, that's called your shareholder base. To have a good shareholder base, if you were especially a OTC company, a small one, 5,000 is a good number. 3,000 is a little small, but you want 5, 6, 7, 10,000 people as a shareholder base. In a Kickstarter program, community as well. Let's move forward. Now we had an opportunity, and they didn't last very long, but they were interesting, what I call DPOs, direct public offerings. Rather than being a traditional company, 5 or 10 years, going through traditional investment banks, expensive, long-term, if you had an existing relationship with your customers or your community, you could actually bypass some of the financial structures and do a direct public offering, selling stock directly to your community. If you thought you could market it, you could do it. The benefit is you have a direct relationship with the customer. It might be quicker, faster. It's certainly cheaper in the long term than the other side. Keep moving forward. Now we've got SPAX. SPAX are the new hot thing within the finance industry, and they're great. Special purpose acquisition of companies. Basically saying, I'm going to raise a bunch of money in a public vehicle and then use that money to go buy other things. Benefit is in a public vehicle, if you're an investor, you've got potential liquidity in the stock. So let's go back. As an equity investor early on in a startup, angel, VC, your position for liquidity to get your money out might be 3, 4, 5, 10 years. I have friends that are in Uber, and on paper, LGOP looks good on paper. They were worth a ton of money, but there wasn't a lot of liquidity options until Uber actually went public. So how do we accelerate liquidity? How do we do things faster? How do we use new technologies? That's where blockchain and crypto and tokens come in. And I know they've gotten a bit of a bad rap, but again, I compare crypto tokens, not Bitcoin, totally different animal, different car, if you will, different horse in the barn. Crypto tokens, to me, are glorified penny stocks. Now that may be a bad way to look at it, but the real reason you buy a crypto token is not because, oh, I think I have equity in a project. It's not, oh, I think I'll get a dividend. These aren't long-term investors. They're speculators. They're traders. They're a guy that wants to buy a penny stock at 10 cents and sell it at $2. They're not going, oh, well, maybe I can get some equity out. No, we have to be honest with ourselves. Where does this lead us to now? A bunch of terms in the finance industry you may not have heard of, but you need to understand. AMAs, Ask Me Anythings. There's these cool communities that exist internationally. Vietnam, Malaysia, India. You might have a Telegram channel, which again is a new technology. If you don't understand, it's like a private Twitter. Instead of one Twitter account, you've got multiple accounts. But in this AMA Telegram channel, we've been in communities that'll have 5, 10, 15, 20, 30, 40,000 people, potential investors you can communicate directly to. Tokens in the crypto world allow you to do what's called a TGE, a token generation event. I can actually create tokens, again, similar to a stock. Let's say penny stocks, again, because we're early stage. And I can offer this token to the community at 5 cents, 10 cents. That investor, that token holder, we have to be careful, the world investor. US is still behind in this. But internationally, there's a lot more liquidity, a lot more fluidity, interesting ways to do this. But if you have a community, you can offer this token at 10 cents into the community. You can actually get that token listed on a multiplicity of exchanges around the world. Not just the OTC in America, limited to hours and the velocity and liquidity of that exchange. You're talking about exchanges in Malaysia, Vietnam, Hong Kong, Singapore, China, Malta, where we do a lot, all over the world. Now you've got multiple exchanges, multiple velocity and liquidity, which increases your shareholder base, or in this case, your token holder. Again, similar parallel. Where am I going with this? The new world allows you to do things retrospectively what's worked. Some things have worked in the OTC world, direct public offerings. Then you've got SPACs. Now you've got token generation and direct offerings through AMAs. One of the most recent ones, fascinating. Any of you that don't understand finance, watch this one. Wozniak, who we know and love, Steve Woz, I've met him a couple times, great guy, created a partnership with a company called eForce. eForce launched a token. Again, parallel here. The token went out on an exchange at 10 cents and is appreciated to about $2.40 with a quote market cap. Again, not the same, but retrospective evolution. You have a direct public offering into international communities, 10 cents to $2. And the liquidity aspect is already there for the investor. Not 10 years later, 10 months. From when I met the eForce guys in Malta, it was 10 months ago. I think they would have gone quicker without COVID. We're still, pre-COVID, PCAC. We're after COVID, pre-COVID. We're still in the middle. eForce, Wozniak, direct. What does all that have to do? If that was done in the US, you would have a publicity account, you'd have a company, you'd have a direct public offering trying to raise money, and that stockholder, yes, they might own equity. In a token world, they may or may not, but the guy buying that stock at 10 cents is buying it because he wants to sell it at $1. Trying to figure out Bitcoin? Great, I've got guys in the finance industry. Oh, Bitcoin, trying to figure out Bitcoin is like figuring out email in the 90s when the internet's over here. What do I mean by that? Bitcoin's a potential, in my opinion. It's a type of gold. It's a unit. Invest and appreciates. Just past 20,000, all-time high. I think it's going to continue to go up. Why? Supply and demand. Basic fundamentals. There's more people looking to buy it. There's more accounts coming on. There's more Bitcoin wallets of people interested. More institutional guys buying. We've got a limited supply over here. Traditional finance, retrospective evolution. When there's more demand than there is supply, price goes up. Simple. The world over here, AMAs, token generation, direct. This is the world of the New York Stock Exchange, NASDAQ, OTC, Hong Kong Exchange, ASX Australia, the Vancouver. This is all the different exchanges in the world. You have one company, one token, multiple exchanges, geographic, 24-hour trading. This is a whole new world of finance, financial structure, raising money, giving liquidity back to the investors. Everybody trying to figure out Bitcoin? Great, have at it. You're missing the bigger promise and premise. What's blockchain providing? A new type of technology funding and financing, accelerated liquidity, faster money, big money for the company to build and expand on. And when they need more money, they don't have to go back begging to Wall Street or begging to Silicon Valley. The structure's been broken. Silicon Valley controlled the money, not anymore. That structure's been broken. You can crowdfund, direct fund. Look at eForce. Again, 10 cents to 250. Great company, cool stuff. I know this was long-winded, but I wanted to get a lot in before the holidays. So hope you enjoy. Everybody stay safe. Steve and Meade, the Bullseye Guy.